Let's go right now onto the charts so that I can show you guys how you can know or how you can easily identify levels of structure, of market structure, using smart money concepts. And learning smart money concepts, guys, will help you increase your win rate, because smart money concepts seeks to trade in the same direction as the big players, the banks, the institutions that control the largest volumes within the FX market. So let's go on the charts. I show you how to go about smart money concepts right now. We are on the charts here, and we are on US dollar Japanese yen chart, and so that's what we are going to look at to determine our market structure levels using smart money concepts. But before I go ahead and come to this live chart, let me just get rid of the chart so that I can show you a demonstration of what smart money concepts are. Believe me, guys, after you learn this, you will really see the market differently and you'll see yourself getting more profitable. Okay, so smart money concepts, in looking for market structure using smart money concepts, what you want to look at is price action in the direction of a buying trend or a bullish trend, or in the direction of a bearish trend. So in this case, we can demonstrate with a bullish trend. You want to look for higher highs, higher lows, and then you want to look for a break of this structure to create a higher high and then a higher low, and then you want to also look for a continuous break of market structure to the upside. Now, in the flip side, you want to look for a lower low, a lower high. You want to look for market to break this structure to create a lower low, okay, something like this, and a lower high, lower than this high here. And then you want also to see a continuous break of structure to the downside. So once you have identified this kind of market structure, either to the bullish trend or a bearish trend, what you want to look at is what is the market doing at these levels here. You see that the market has broken this level. Okay, you can see here it's broken this level. So what you do when you see the market breaking this level is you don't just jump into a buy at this point here, because this is where the market, let me just zoom this in. Okay, this is where market broke this high. Now, what is this high in real life? Just put this as an example of let's say fuel prices. Okay, when the price of fuel, for example, is rising up and then it reaches this high price, why does it stop here and then it drops to the downside? Why does it stop here and drop to the downside? This just obeys the law of supply and demand. Okay, when there is less supply, okay, when there is less supply of a commodity or any product, when there is less supply, okay, of a commodity, the price of that item rises. Okay, it rises. That is why the demand of that item increases here, and then the price rises because the supply of that item is low. So when the supply becomes much, okay, when there is so much supply of a given item or commodity within the market, it becomes in excess. Okay, there will be a lot of that item available on the market, so the price of that item starts to drop again. Why? Because there is a lot of supply of that item, so the price drops. This is just how the market works, even in real life. When there is availability of stock or availability of a certain commodity within the market, you realize that there will be a lot of supply of that same item within the market, so its price starts to drop. So when the price starts to drop, it drops until there is demand again for that item. Why does it create demand? It creates demand because as the price of that item drops, less and less people are more likely, or less and less sellers or people or dealers will be interested in selling that item. For example, if if the prices of fuel drop too much, nobody will be interested in selling that commodity. Okay, for example, if the price of, say, let's say sugar drops too much, the sellers will no longer be interested in dealing in that product, because their profitability will be affected because of the dropping prices. So most people will stop selling that commodity. And so as most people stop selling, then the supply of that item drops. Okay, the supply of that item drops. And when supply drops, you'll find that there are few sellers selling that specific commodity, and then it becomes rare in the market, or it becomes scarce in the market, creating demand. That is why you find demand here. Okay, so then when the demand becomes more than the supply, okay, when the demand here becomes more than the supply, okay, then the price of that commodity starts to rise again. Okay, now why does the price of that item rise above the previous supplied price? Okay, why does it rise above there? It rises above there depending on how the demand is here. Okay, depending on how strong the demand is here. If the demand is stronger than the previous demand, which could be the previous low here, okay, if the demand here is stronger than the previous demand, then the price of that item will exceed the previous supply price. Okay, and that is how market works in simple terms. So how do you get involved in this when it comes to smart money concepts? Now, what I've given you there is a lesson that you must really learn if you want to learn smart money concepts. So smart money concepts, how do you apply that on the FX market? What happens is that most people, when the price rises and reaches this point here and breaks above, okay, what people do is they jump into a buy here. Okay, they just simply jump on a buy here and maybe put their stop loss here or below, like this, or here. Okay, and then they want to target like a 1 to 2, something like this. Okay, yeah, you would win this trade. For example, here you would win this trade, but you would find a point where you'll get into drawdown, serious drawdown here, because you are jumping into the trade early. What you need to know is the sellers will be looking at the previous supply price. And so when that price exceeds the previous supply price, what the sellers will be doing is they will start to sell off at that high price to make profit. Okay, they'll start to sell off. So that sell off creates a retracement. Okay, creates a retracement as sellers or people who supply this particular commodity start to decrease in the market, because they are selling off their commodities. So less and less people are holding onto the commodity. So the supply drops to create more demand. So you want to get involved when the price of that commodity drops below the previous supply, this area here. Okay, you see this? Wait for it after the breakout, wait for the price to drop below previous supply price, and then you look for confirmation candlesticks around here to get involved with the market. So you would be looking for maybe a bullish engulfing or bearish engulfing if it is on a bearish trend, and then you'll be targeting this high here, that supply price. Okay, because you're sure that price will come and knock off this previous supply price. And here you will barely get into drawdown. You can get in drawdown, but it will be rare. Okay, so the flip side, the same thing would happen. Okay, same thing would happen in the flip side, guys. You would find something like this, break of structure here, as you can see, and then you would get another break of structure right here. Okay, so when price breaks below here, it has taken out a previous demand. Okay, previous demand to go lower. Okay, Now it will price up to supply again, to come back to a supply area so that it can continue lower. Just the flip side of this, what I've shown you on this side. You don't want to get involved immediately. This lower low is taken out by the price. Don't just start selling here like this, okay? Don't sell like that, because yes, you'll win, you'll get some win, but you'll be going through pain, because the price will come back and cause you a lot of pain here in this drawdown. What you want to wait for is for price to come back above this previous demand here, okay? Just wait for it to come back above, then look for bearish engulfing or bearish candlestick patterns around here for it to get involved with the market, and then target this low here. As you can see, you'll get a much better win with a risk to reward ratio here. So let me show you guys that on a real chart. I'll show you here on the real chart using the current price so that you can understand how to trade smart money concepts. So here, what we identifying here is market structure. So you can see market structure is going down, creating a lower high, breaking down here, creating a lower low, lower high, lower low, lower high, lower low here, lower high, something like that, okay? Creating lower lows and lower highs, okay? It's not uniform, that's perfect, but it's creating lower prices, and yeah, you can see the market is going to the downside. Now, what do you do here? What you do here now, let's assume the market is up here and it has this low, okay? It has this low here, this one. So you have, for example, your rectangle tool right here, okay? You have your rectangle tool right here. So what do? You wait for market to break this low, okay? Break this low here, which happened here. Now, you don't start just selling here. Yes, you can sell here depending on how candles are printing, but I would advise you not to sell immediately here, because you will not get a good entry, okay? Wait for price to come back up to this level here, or preferably I would wait for market to actually break above here, then look for trades to go down. This pattern here, this sell would work, but in my setup, this would not be a very good one to take, because usually it's good to buy when market pushes above previous demand. So I would let that pass. Let's look for another one. So we see another low here, okay? Can see another low here. Now what happens? This low here is taken out by this candle here, okay? And then what do? We wait for price to come back above this level here. I hope you guys are seeing above this level. Wait for price to come back above this level. Then we look for candlestick formations or momentum candles that show us a bearish move. And what do we see here? We see these candles here. We see this momentum candle here, which shows us that sellers are now stepping in, or the banks are stepping in. Big players are stepping in. So at its close, we can take a short trade here, because it's a momentum candle showing us sellers are stepping into the market. You can just put your stop loss above that range here, and then you can target whatever, whether you want a 1 to 2 or 1 to 3, you can target it like that. That would be a beautiful trade right there, okay? And then here, you can also see right here, this is a low at this wick here, okay? Right now, I'm showing you this on current market price. You can see this is a low. That low was taken out by this red candle here. Hope you guys can see. Can see this red candle closed below this low here. Now, you wait for price to come back above this level here, which it did here. And so we are looking for bearish momentum candles for us to take a trade and target this low. Where do we get bearish momentum? We can see here this candle left a very long wick on top and closed this body. and then it was followed by another bearish candle, we could enter a trade there. If you fear to enter here, okay, if you fear to enter here, you could enter on these two here, two momentum candles here. Okay, you can enter like here on this candle, and then your stop loss above that range there, and then target this low here. You see this low, can target that candle's wick, this one here, target that wick like this. There you'd have your 1 to 2. Right now you'd have this trade running into profit. If you took the trade from up here at this second candle's close and you used this as a stop loss, that high, and then targeted this low, you would still get about the same risk to reward ratio. So you guys can see that that is how you trade smart money concepts. Don't just enter a trade when there is a break of structure. Wait for market to pull back up, give you some kind of a continuation candlestick pattern, okay, and then you can enter your trade. If you follow this, you will find that, yeah, you will be more successful than just randomly taking trades. Let me go backwards a bit and then show you also on a bullish trend what could happen. Now, on a bullish trend, you can see that market here is creating a low here, a high, a higher low, a high, a higher low, a high, okay? This is a low, a high, higher low, like that. The market structure is not very clean, but you can see that it's creating structure to the upside. So what you do is you wait for market to break one of those levels. For example, this is a high, okay? This is a high here. Wait for market to break above that high. As you can see here, this candle broke this high, okay? Broke this high. Or you can even use this if you're fearing to use this. This candle breaks this high. So you don't just enter, wait for market to come down below that line. You wait, like here, you can see it came back down here, okay? Because that's what the market does. It comes back down below that, like here. Then from there, you look for momentum candles, which it gave you immediately, like 1, 2, 3 bullish candles, or 3 white soldiers. On the third candle, you can take a trade, put your stop loss below, or you can even put it below this wick. That's the 281 pip stop loss, which is really, really tight, huh? Let's see, did we get that trade? This would be a long-term trade, very, very long term, but you'd win it. You can see what happens. So yeah, I don't want to take the video too long, guys, but you just go look at the principles I've shown you here. Try to look at them, backtest them on any pair you like, and it works like magic, guys. Remember, guys, this is a smart money concepts training that you guys will not get for free anywhere. It is very easy for you to understand, and if you apply it into your trading, you'll find that your win rate will go up very quickly. Thank you guys for watching. Until next time, peace and out.